So let's talk more about how to create your own trading plan. Your overall plan, that's your strategy. That's going to be your guide that's going to help you when it's time to execute. And they're actually not too hard to build, actually pretty easy to build as far as, the core components, the core 5 steps that you would use to build out your trading plan. We'll walk through that here. And once your trading plan is in place, then you're set, right? And then you can follow that framework, and then you can adjust or build on it, but you've got your trading framework set, your trading plan set, and then you just keep improving as you become more experienced and as you want to keep changing, adjusting to keep improving your trading results. So let's show you the 5 steps on how to basically create your own trading plan. Step 1, as far as the steps kind of on this is, first thing you're going to do is you're going to determine if a trend exists, right? That's where your indicators come in. It's obvious that trend following indicators fail if there's no trend, right? I mean, the idea, if you're trying to use an indicator that's going to try to show a trend, and if there's a trend, we can kind of predict what's going to happen going up or down in that trend. And if if there's no trend, then your indicators are not going to be successful, right? So, the key of that whole trend is your friend is so important. So keep that there when you're looking at these indicators. You're looking for these trends as part of a 5-step plan. Number 2, have a rule for opening a position, basically your buying position. What are you going to do? What are the criteria that will be, what are primary, secondary indicators telling you whatever that says, I'm going to open a position when this happens? For example, it might be like, I will buy when the 20-day simple moving average crosses the 200-day simple moving average. And I confirm that with the MACD, moving average convergence and divergence, right? So that's the rule, right? It have to meet these things in order to buy, right? So that's part of my plan. I'm going to look at indicators, I'm going to look at trends, and then number 2, I'm going to buy or open a position. That's the key part. When am I going to open or buy once once these indicators kind of line up? And this is an example of that. Number 3, you're going to manage your money at risk by scaling up or down, and how much you scale up or down, or even at all. But that's a great way to build into an overall trading plan. Now it's looking at more managing your money versus, let's say, a trading indicator. And so you'll increase your funds in the current winning trades and withdraw from poorer performers, the idea of scaling money up and down based on a trade. So for example, we talked about an example a little earlier too, if you put $500 that you've dedicated for each trade, and then you have $200 or what you're going to put in when number 1 and number 2 are met as far as primary and secondary indicators. And then you'll keep adding to that trade for profitability as numbers 3, 4, and 5 are met. By the same token, once it certainly reaches all 5, or it might not get to all 5, you're going to sell right away once you get a sell indicator, right? That's the idea, is you sell everything right away when there's a sell indicator. But as far as adjusting how much money you have at risk by scaling that up or down, you can kind of take it a little bit easier, or adjust how much you want to put at risk. If you say, okay, if I see my number 1 and number 2, I'm going to put all in, that's fine too. Just understand you're taking on more trading risk than if you spread that out a little bit too. Neither way is right or wrong, just it's a little bit more conservative and a little bit more risk adverse to spread that trading money by scaling that money up or down. For closing a position, we have, the second one is establishing when to buy. Well, it's also important to know when to sell, right? And that's very important because that's going to help control your losses. You want to control your losses, and you want to lock in profits and control your losses and have increased profitability, of course. Now, active traders are not buy and hold forever type investors, right? They're not going to buy something and then hold it for 5 years or 10 years or forever. They're looking at targets and stops when they want to lock in those profits. And that's when we look about some other things around trading, around targets and stops, and how to set that from an order standpoint. But the idea is that you're looking at a target you're going to want your security to try to get to. You may not get all the way there, but that's the target you're looking at. And once it hits that, you're going to sell to lock in that profit. Another thing is using stops, where it might go up a little bit, but it might start going down. There's a stop, limit or a stop, where it's a trading mechanism to help you automatically, basically sell and protect your downside. So for example, you might say that as part of your plan, that you're going to sell everything when the price crosses below the 20-day moving average. Once that happens, you're selling. You're not debating. You're not having a whole big discussion about it. It's like, no, this is the rule. This is part of my trading plan. This is my rule for closing a position. And of course, you can have whatever indicator and rules you want. You'll be developing that on your own, of course. But the fourth part of this is establishing a rule for closing a position. And then lastly, number 5 is doing it again, right? Doing it over and over again. It might be with a new security that you're now looking at for the same types of indicator situations, a primary, secondary, whatever it might be. Or sometimes it's a re-entry into the same security as the price waxes and wanes over a period of time. You might have a smaller watch list of securities that you really like to trade in, and you're always watching those, of course, and then you're doing these same 5 steps as far as your trading plan. So for example, a swing trader, may trade several times in and out on a security with a longer overall predominant trend. That's the whole idea, that swinging, the price swinging up and down, but they're watching this overall trend, but they're kind of getting in and out more frequently than somebody who might ride that trend almost, the whole way and then get out all at once. Either way works, just no matter how frequently you're trading and your trading style, for example. Or, for example, you want to walk up the Bollinger Band, and then once it's off the band, then you sell, and then you get back again when that security gets back on a band, walking up. So you're really using that maybe as a primary indicator, something else confirming it. So when it's on the band, you're walking up the band. Look at that lesson again. If this sounds a little unfamiliar, but look at that lesson if you need to. But you're walking up the band, you're going to keep riding it. Once it's off the band, you sell, and it's back on, you're buying again, right? So you're kind of doing that with maybe a smaller universe of securities. Either way, how you do that, you're trying to set up that whole trading plan of doing it again and how many securities you might be looking at. So if you think about it, kind of the steps around there, you have your tools, your indicators, and you have these rules, you have these ideas of how you would use all that. And then the 5 steps is determining if the trend exists. That's your indicator, is going to help you with that. What's your rule for opening a position? That's where your discipline is going to help you with that and establishing that all ahead of time. Managing your money is an important part, and you can manage that risk by scaling your money, as far as how much you want to put in at a time. Establish a rule certainly for closing the position, so you need to know when to buy. But number 4, you need to know how to sell, and then doing it again and how you want to approach that. And again, that discipline will serve you well. If you follow your plan here, as you deviate from any of these 5 points in the plan, then it gets a little bit more less efficient and maybe less profits for you. So follow these guidelines, and then you can build on this framework as far as creating your own type of plan. And then that's kind of the last thought there, is keep that framework, but adapt your rules as you evolve. Because you will evolve as a trader, especially if you're a little bit newer to this and you took the course because you're a little bit newer, maybe you're brand new to this, you will evolve. So for example, as you do more trades, you're going to become more comfortable and you're going to become more confident, which means your risk profile is going to change. You might have started, let's say, trading and be a little bit nervous and all, and that's perfectly okay. Everybody is. But as you do more trades, you see some success, you're going to take on maybe a little bit more risk, possibly, because you're more confident and you're more experienced and you're better at just trading in general. And the amount of time that is available for you to trade could change too. Maybe you've got a full-time job, it's just crazy, it's busy, everything's just crazy, so you just trade a little bit. But maybe now you've reached a point where you have more time freed up and you're more confident, you want to trade a little bit more. Well, then you can adjust your framework for how you might want to be a more active trader than somebody who's a little less active trader. The other one's right or wrong again, it's just that you can adjust your framework as these things happen. Particularly with risk profile, you might be adjusting your framework to be matching up with your risk a little bit more. Again, you take on a little bit more risk, the idea is you're going to get a little more reward as part of that too. So more risk, more reward. And so that's where that confidence and that knowledge as you keep going is going to serve you well. And I hope this course has helped you with that, to give you that confidence and that framework to then build your own success. That's the whole idea here of helping you be successful.